Hey everyone, and welcome to today's video. I want to share my thoughts, and you know, this is not a financial advice, but trading is going to change your life as it has done to mine. But in all, just make sure you know what you are doing, and yeah. So let's get into this video. I just want to make like a thought process, right? I just want to show you a brief on how I trade and how I like keeping things very very simple. Many people the way they trade, they like stuff things together and try to make their like they end up making their trading very, very complex and too ambiguous, right? So if you want to actually get rid of all the noise and all the you know too much, how will I put it? There's a way you put in too many concepts that makes your trading start getting stuffed and you know you even get scared of even coming to the chat because once you come to the chat, you are seeing this, you are seeing that, you are seeing so many concepts, and with that, it's going to like distract you from where the market is actually going to. Right. So, if you have the capacity to make your trading quite simple and very very intact, it's going to give you a lot more edge, right? So I'm not the best of traders, right? But I just want to show you how I trade, and it's been working very very good for me, right? Okay, so firstly, I'm a day trader, right? But I like coming to the daily at first, right, to get my daily markup to see the overall trend, right? Because I use my daily time frame to look at my overall trend and yeah, know what the market has been doing for a very long time, right? So as you can see right here, you notice so the first thing I do rather before I talk about the chart, the first thing I do when I come, I go to my daily time frame and then I look for the trend, right? So take this down. The first thing you want to check for is what your trend. Now what is a trend? The trend is a movement or a direction that price is currently at. You understand? So if price is in an upward direction, it means it's an uptrend. Okay, so this is like the primary level or the nursery level of forex trading. If price is in an upward movement, you know what? It's an uptrend. But vice versa the case, then it's a downtrend, right? So you obviously need to know where price is or where price is heading before you continue, right? So on our daily time frame, this chart looks quite confusing. So let's just go down and see. So we're quite bearish. We're quite bearish before, right? As you can see, this should be a weekly swing, right? I like using more of recent price action, right? So identifying your swing ranges can be um, diverse. It can be based on your own individual way of marking it out, right? So it is no mechanical way. Okay, because as at last year or 2 years ago, I used to use a particular mechanical strategy of marking out my swing trade or swing ranges. Now I normally use 40 pips for 4 hour time frame, 90 pips for daily time frame. But as time goes on, I noticed that volume and volatility started changing. Okay, as we grew over the months, right? So it doesn't have to be a mechanical or a fixed point, right? It can be based on how price delivers itself, right? And from what I'm saying here, right, you can notice that this was the last swing. Right? You can see this big pullback, right? Okay, if you study the previous price action, you notice that all of the price action swing has been that way consistently, right? So you notice that this is the last area that switched bullish, right? So we've been trading upwards, then we came down, then we broke again. Okay, so no, we did not break again, right? So since we broke this um, leg downwards, right, we've stayed bearish since we broke that leg, right? So we've been bearish ever since. So it's safe to say that the daily time frame is bearish, right? Right. Okay. So now this is our swing range. We now know the trend. The trend is what? The trend is bearish, and we now have our swing rate on our daily time frame. Now, what do we know? We know that after a break of structure, we do what we expect a pullback. Why do we expect that pullback? We expect that pullback because price has done its job. When I say done its job, I mean the job of this pullback, right? Okay, because price was about switching bearish, right? So it broke this external liquidity. This is an external liquidity. Don't worry, we are going to talk about liquidity probably in the next section, the next video. But to those of you who already know a bit about liquidity, you should know what I'm talking about, right? So this is the external liquidity down here. Price took out this external liquidity. How do you know? Well, once liquidity gets taken out, there must be a correction, right? There must be some sort of pullback before price continues its trend, right? So I want you to have it in mind that after a break of structure, expect a pullback before price continues its initial movement. Now, what's the initial movement? The initial movement is a bearish trend because after we had this break of swing structure, that's when we concluded that yes, we are bearish, is it not? Now, since we know we are bearish, right, we expect price to keep going down. But price is not just going to be watering down to the downside. No, price doesn't work that way. For every buy order, there has to be an equal and opposite sell order, and vice versa. You understand? So once there's a break of structure, price has to balance itself by retracing. There were a lot of orders that were left out here on field when price started selling downwards here, right? So there has to be some sort of mitigations of these orders to fill all of these orders, taking out some liquidity and generating some fuel before coming back to take out this external liquidity again. Oh, sorry, I just did something stupid. Okay. So before coming back down to take down this external liquidity again, right? And that's why we always have what a correction or what a pullback, a retracement after a break of structure, right? So price is going to do something like this. That's why we have lower highs, lower lows, lower highs, and lower lows, right? Because price will do what? First of all, what break this structure down here, right? After breaking this structure down here, it will now look to do a pullback, come into premium prices of this leg, take out some early sellers and those that are looking to continue this downward movement without any patience, right? It's going to induce all of these early sellers down here and probably come to the extreme leg and then do what? Boom, continue its trend to the downside, right? So this is what the market does every time, So when you have a big structure like this, you do not want to, just immediately jump on selling. You understand? So you need to know, and it doesn't matter the time frame, whatever time frame you're on. Okay, so enough for that. Now we know that what we are pulling back, right? And if you look from premium and discount to, you'll notice that we are now in the premium level, right? So anytime from now, price might just do what it normally do, probably take out all of this liquidity here, right? Price might just take out all of this liquidity. I'm having a network issue. Okay, so price might just take all of this out, the liquidity sitting here, and then you start continuing the movement to the downside, right? So I'm not the market maker. Market can do anything it wants to do. This is just hindsight. Okay. So now that we know our daily time frame, I just go down to my um and my 4 hour time frame to also see what it's doing, because the 4 hour time frame is like the internal time frame of the daily time frame, right? So the daily time frame is like the outward body, the outward structure of the 4 hour time frame. The 4 hour time frame is what fulfills the objective of the daily time frame, right? So now if you notice here, we had the break of structure to the downside, and after a break of structure to the downside, we expect a pullback. Now for this pullback to happen, the lower time frames are what is going to do or facilitate that movement to the upside, right? So for the daily time frame to start pulling back, the 4 hour swing structure is going to switch bullish, right? So you notice that the 4 hour time frame was bearish, 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 bearish till this downside, right? We are bearish till when the daily time frame was now about to pull back to the upside, we then had what? A break of structure, or the break of swing structure of our 4 hour time frame, right? So these are 4 hour time frame switching bullish. And this is a sign, right? For anything that happens in the market, or for anything that is about to happen in the market is always going to give you a sign. Not always, pardon me, but most of the time, right? It's going to give you a signal. And most of those signals are like change of character, probably price about to reverse, it's going to give you a change of character, or taking out inducements, that okay, price about to do what? go in the opposite direction. Break of structure, tell you that price is going to move to that direction. So there are so many signs that market can give you um, in the market, right? So this is a sign that the daily is about to do what? Pull back, into discount pricing before what continuing its trend to the downside, right? So what do we know? After we see this break of structure, that's when you can now look. Okay, at least if and notice it's not just any time frame, right? Each time frame has its own objective. Like the 4 hour time frame, its objective is to fulfill the purpose of what of the daily time frame. So if the daily time frame is about to pull back, the 4 hour time frame is going to do was show you when it's about to pull back. Same thing with the 15-minute time frame. The 15-minute time frame is going to facilitate both the 1 hour and the 4 hour time frame. Don't worry, that's like some advanced concept. I know I told you guys I want to make I want to show you a concept that helps you keep your trading simple, and that's what I'm doing. So I don't want you to feel like what I'm saying is actually more complex than what or more than how you actually trade. You get, so I just want to try to keep it very, very simple. So I'm not going to talk too much, right? So I just want you to know that price is going to give you a sign, right? And one of those signs are like breaks of structure, like when you're about to pull back, right? We have a break of structure, right? You're about to pull back. Okay. So before this large pullback is going to happen, price is going to give you a sign, right? And those sign is what all these breaks of structures from your lower time frame, right? Okay, because the lower time frame facilitates the higher time frame to do its job. As simple as that. Nothing too complex, right? So I noticed that when we first of all, okay, looking at liquidity concept and the rest, because know that this break of structure is not enough. It's not enough. That's the truth. Because one thing that price might do is that it might just take out this high, then come to something like this, come to probably this supply zone, and then continue the movement to the downside, right? So how do we validate that what this high is going to hold? Now we use liquidity concept and sweep zones and all those stuff, right? So if you notice, price actually swept liquidity. We actually took out this low here first, okay, before this push to the upside, right? If you look here also, you can see this sweep of this week as well. And then we also have structural liquidity. Okay, we have this internal range liquidity, which is this inducement down here, right? So you'll notice that price swept all of this, okay, swept all of this, and then it came to this week, right? If you're kind of conservative trader, you wouldn't even enter from here. You'd have still waited for another confirmation again. And that's when you go down to your 15-minute time frame or your 1 hour time frame. Okay, I don't want to make this video too long. That's why I'm just going to, give you the confirmation from here, because I'm seeing a confirmation here as well. Probably if you want to wait for a change of character on your 4 hour time frame, you could also do that. Or if you want to go in earlier, then you can go down to your lower time frames like 15 minutes or 1 hour time frame to get an early entry. Right. But if you had waited for a 4 hour change of character, then you got it here with this inside backhand, right? So price just literally wicks it. That's your change of character. And then price then came back to the extreme end, right? On this candle. Notice that we also have an internal range, or should I call it a fractal range liquidity down here, right? Okay. Nice. And notice how price just came down here. So this would have been an extra confirmation for you to enter. Alright. So basically, before you take any trade, just look, where is your trend? What is the direction of the market? Are we in a pullback phase? Are we pulling back, or are we in our continuation phase? Okay, because there are different phases of the market. The market can be either in a continuation phase, in a pullback phase, or it's ranging, right? If it's ranging, it means maybe there are no volume, too much volume, volatility in the market, right? But if it's pulling back, that price just broke a structure. For price to be pulling back, there must be a structural break. Hope you understand what I'm saying. Price must have taken an external liquidity or an internal liquidity, and then it's trying to do what correct back to its swing high or swing low before doing what coming back to take out the next external liquidity, right? So after that said and done, I think we've talked a lot, right? So that's how actually this is actually my entry model, right? For what's it called? For pullback, right? So if I want to trade pullback phases like this is how I trade. Exactly how I trade. I must make sure that my lower time frame gives me a sign that okay, the higher time frame is about to do what's about to pull back. Like in this case now, the daily time frame was about pulling back, and then the 4 hour time frame switched bullish by taking out what the swing high, and then doing what taking out internal range liquidity, and then boom, we had it to the upside, right? So we then pull back a lot, and we are still pulling, we are still ranging actually, because you go to the daily time frame, you notice that let me just fast forward this a little. Okay, all right. You notice that it's still bullish, right? Price came down to this zone and then it's still looking bullish, right? So I still feel like price wants to like head to this high first, clear this first, and then come down to the downside, right? But I don't react. I don't sorry, I don't predict. I react. Okay, so yeah. So I don't know. Let's see if we can get any if we had gotten any trade opportunity along the way, right? So along the way of this pullback, you can see there are many re-entries here on daily time frame. So we can actually enter a trade from the daily time frame. So everything just boils down to confirmations, right? Everything just boils down to confirmations. Once you've gotten your higher time frame hindsight, your higher time frame perspective, use your lower time frames to confirm, right? So we could have gotten another entry down here. This was an structural liquidity. Price tapped in here and then we moved. So let's see. This was a break of structure, a sweep. So what I like seeing for my entry model, right? If it's not complete, I don't enter, except I see more confirmations develop on my POI, right? So for my continuation entry, now notice that we are pulling back, right? We've cut the pullback down there. I don't know if it is shard. Let me just leave it. We cut the pullback from the 4 hour time frame that time, right? So now what we are doing what we are in the continuation phase of the pullback, right? So the pullback is continuing. So we want to see if we can re-enter on that continuation phase on that pullback. Hope you get what I'm saying. Now the way I treat continuation phase is actually the same thing, but I am more aggressive on my continuation phase my um than my pullback phase, right? Because when I know that price is about to pull back, I must wait for a lot of confirmations first. I must see that sweep, I must see that internal range liquidity, and then I must see my lower time frames confirmation before I enter. But once price has started pulling back, right? It has already started. The pullback is now clear that is pulling back. Now, for me to continue that pullback to my either discount or um premium price depending on your trend, okay, I can be quite more aggressive than when the pullback is about to happen, right? Because I know that we have already started the pullback and we might go further and further into the swing leg before coming back down to continue the change. Hope you get what I'm saying, right? But I'm not actually too aggressive. Do you know why I'm not too aggressive? Because one thing you know is that, right, you should not be following your pullback till eternity, because if you are bearish, right, if you are bearish, what you know is that after this break of structure, price will just pull back. Price might pull back to the leg, extreme leg, but sometimes price might just come to the equilibrium or even below, and then we do what, we continue pulling back to the downside because sellers are in control. You understand? So in as much as you are trying to play that continuation pullback, you still do not have to be too aggressive, because price might just come to anywhere and then start falling back down. What I'm just trying to say is that at the start of this pullback, I am very conservative, but after the pullback has started, right, in between this leg, I am not too conservative. I am more like I'm in a balanced area, not too aggressive, not too conservative. You understand? The only time I am very aggressive, right, is when I want to continue the sell to the downside, because I know that that's the change. That's the change, that's the overall trend. So I can even not. even wait for any confirmation. I can just take it directly from the POI. Hope you get what I'm saying. So that's just what I wanted to clear out. So yeah, I'll see you guys in the next video. Thank you guys.